Hey, Jimmy Martin here, talking to you again a little bit more about the alphabets with the ABCs, the advanced banking concepts. Today, I want to focus a little bit more on the ABA, the accelerated bank account. Now, if you compare that to your traditional bank account, you see there's going to be some real differences in it. One being, let's just say, if you take your traditional bank account, you're probably going to get an interest rate on a return on there of probably about a 0.5%. That 0.5% means that if you have $10,000 sitting at an account, it'll probably take you about 144 years for that 10,000 to double into 20,000. So most of us probably don't have that much time. That's why you don't really see a big return on the money that you have sitting in the bank account. But conversely, banks understand that and they kind of take that principle and flip it on you, whereas though they take that same $10,000, give it to you in a credit card, and they maybe charge you 18%. What that means is that every 4 years, that $10,000 balance that you have on that credit card is actually going to double. So 10,000 4 years from now would be 20,000, and then 20,000 would turn into 40,000 4 years later, and then 40,000 4 years later after that would turn into 80,000. That's kind of how the compounding happens. Well, we kind of take that same dynamic when we introduce you to the ABA, the accelerated bank account, and show you how to flip that so that it can start working more in your favor. Second aspect you can look at in terms of that is like the taxes and what you're going to pay for the interest that you earn on a bank account. Now, you probably don't really see it a lot because you don't earn a lot on your bank account to begin with, but taxes are one of the biggest expenses we have in our lifetime. But to really further give you an example of how this would work, just think of like your 401k, and imagine you had $100,000 in a 401k and you're in a 40% tax bracket. Well, if you actually took that $100,000 out of your 401k, you're left with $60,000 in which you're able to spend. But if you had that, that same $100,000 in the ABA account, where as though you'd be sitting at a 0% tax bracket, you can access that money income tax free. So now you can spend the whole 100,000. But really, what most people see the dynamic on there that really appeals to most people. This is kind of like where the elite really excel with one of these bank accounts, is what it can do for you in a catastrophic event. The say you're looking at the ABA compared to a regular bank account. If something catastrophic happens to you, there's not much you can do to access the money that's inside your regular bank account. What's there is what's there. But there's actually a fund set aside. There's money that's already in a pool that's in place for you if something catastrophic were to happen, such as let's say you had a heart attack, stroke, cancer. You can actually invoke the clause on there and be able to withdraw those funds, so you can use that to be able to to maintain your lifestyle and to really keep things going until you're able to recover and start putting money back in the account. So you want to see if something like that well, if you want to learn about something like that and see if you qualify for an ABA account, what you can do is get back to the person that shared this video with you. Be happy to set you up with a green sheet experience to see if it's something that you can incorporate into your financial profile. Talk to you soon.